Bob, you've been animated lately on the notion of battleground stocks versus meme stocks. Now, what's interesting about this for people who trade and follow trading news is that these names get thrown around constantly and no one sort of unpacks them and defines them. Why don't you give me your definition of what is a battleground stock, what is a meme stock, and how important are they to the sort of trading zeitgeist in the markets? And these are, this is like a big thing, my view, if you're in the markets every day.
Well, first of all, we'll give like a free dinner to anybody that comes up with the best daddy of data meme. So, we'll do that.
Well, at least I didn't call you the granddaddy of data because you don't have grandkids yet.
Exactly. So, but the daddy of data, I love that, Charlie. Thank you very much.
Okay.
So, yes, we have been very animated lately. Why we are very anti-jargon. You and I have been doing this show now a couple of months now.
Right.
2 months. And we try to say what things are and define them simply so that the viewer really can penetrate the language. When I first started Wall Street, which is, a long time ago, but one of the best lessons ever was my first day on the job. And someone said to me, very senior guy, just said, Bob, it's just the lingo. It's just lingo. And if you can solve the lingo, you can actually start to explain things simply, and then you can start to understand. And he was dead right. And so this past week, we've seen such an amount of jargon and lingo being tossed around because these things get clicks. So for example, you and I have been talking about battleground stocks and why they're important. And lo and behold, many of those stocks that we put on a table last week, I don't know if we can pull up last week's table, but during the show, we can go back to that. One of those stocks was Kohl's. And
yes.
we said, look at the amount of active long versus short interest. It's almost equal.
Now that's your standard definition of a battleground stock in the market, where the market really hasn't made up its mind whether this is a dog or or something that's going to make them a lot of money. Right?
That's right. So you have equal conviction on both sides, fighting each other every single day. And what's important about that is because you can look at the float and you can look at the outstanding shares. People confuse those things all the time. Outstanding shares, how much has been issued. Float, how much can be traded. But then you have to define how much can be traded. Well, an index fund doesn't trade every day. So you take that out of the float. You take treasury stock out of the float, take insiders out of the float. Then you start to say, okay, what constitutes that float? Active money managers or buy and hold is a different strategy versus short retail. Well, in today's world, I also think it's another misnomer. In today's world, index is retail.
Yes, you're right.
It really is. It's become retail. So passive indexing has taken over from what was 25 years ago. People would invest with an active manager at XYZ big mutual fund. Now they own a BlackRock ETF, where they own some kind of State Street index fund, et cetera. So you take that out of the flow, then you see where the battle really is. Now, lo and behold, we have gotten calls from so much media over the last 3 or 4 days.
Huh.
So much media. Now, not educated, smart, I would say the king of all news, which would be you. If I'm the daddy of data, you are the king of all news. Okay.
Yeah, thank you. I'm competing with someone else on that one, but anyway,
but that's true. But he's media, you're news. That's different.
That's true.
Big difference.
So they're calling you on these battleground stocks and conflating them with meme stocks.
That's exactly right. And so
now, how would you define a meme stock?
Well, where the meme is the cause of the speculation. So, for example, when Roaring Kitty puts out an Uno card, who knows what that means? People buy it.
So it's the source that makes it the meme.
I think so.
If it's Roaring Kitty or if it's a bunch of apes, as they call them on AMC.
That's right.
There's also the meme is also there's a social justice element to some of this stuff. We can screw the hedge funds and
100%.
stick it to the bad guys who are
Stick it to the
distorting the
bad guys, stick it
markets.
to the short sellers, stick it to those guys. So we got all these calls this week about Coles. Coles was up 30% one day, then it was down 15%. It's up, I think it's like 17% today. It has that much volatility because the conviction is meeting, the immovable force is meeting the irresistible object, and it's moving.
And
Back,
people are calling that a meme stock.
they're calling it a meme stock. It's not.
That's crazy. It's not.
It's a battleground stock.
Right.
Big difference. And so when stocks go up that are getting talked about, people say, "Oh, that's a meme stock." It's not. A meme stock, a true meme stock, is when you have short interest way bigger than the long, and it gets squeezed, or you have the amount of money being lost by the short interest component of a particular stocks.
And the source is really is kind of funky too. You have to
it's funky. Right. But it moves prices, right?
So it's following a meme
that
we're sticking it to the bad guys.
That's right. That we're sticking to the bad guy, all kind of thing. So, Coles, we've been talking about that. We've been talking about C3AI. We talked about Rivian. A lot of these stocks all of a sudden become very volatile, precisely because I think we've been putting a focus on where is the capital really being deployed. So we did a study this week. We took a look, and it turns out about 4% of all the shorts in the U.S. are in these battleground stocks. So it's not a small amount of money. It's actually about $50 billion. The active longs, mostly hedge funds, right, on the other side, is about $50 billion. So you have active hedge fund, $50 billion. Short seller, also definitionally hedge fund, $50 billion, fighting each other in these stocks. That is not a meme stock.
No.
That is a technical weight of money, flow of money, capital flow situation.
Now, what happens how do you, as a trader, if you conflate those, like, how bad does that cost? That could cost you, right?
Well, if you're on the wrong side of Coles, it costs you 30% in a day. If you had a 2% position, hey, that's 60 basis points of return.
If you thought the meme sort of momentum was going to carry you, right?
That's right. If Coles was, it depends on what percentage of the portfolio it is, and then if it's a 5% position, it's down 30%. It's 1.5 points, right? So that's a lot, right? To lose on one stock in a month, that's unacceptable risk management. So that is you can really damage your win-loss ratio, otherwise known as a Sharpe. And you can look at your drawdown, how much you've lost over a period of time. Those things get really dramatically affected.
And any other stocks that fall into these categories that are getting conflated?
Well, we've done a lot of research. We love the Coles story because it's a famous name, it's a brand name, and there's a lot of there's a lot of interesting characters. And it makes for a great financial soap opera. Now the board's involved. Someone wants to buy the company. There's been all these accusations going back and forth in the company. So Coles is a great example of that. We'll post these things coming in the week of battleground stocks. If you actually subscribe, you'll get to see those things, and then we'll actually tell you what. And there's a long list. There's about 50 or 60 stocks. So we'll post
which is the beauty of subscribing to S3 Data Partners.
That's right. And watching this show, as you'll get a review. And so Coles is a great example, and it's made headlines. And I want to go back to the press a little bit, because the folks actually Investopedia get it right.
Investopedia.
They actually got it right. A couple of the mainstream media got it right. A lot of the financial news did not. And so there was a story in the journal about these are new meme stocks. Look at Krispy Kreme, et cetera. And most of them are not. They're not. They're driven by actual market dynamics that you can see and actually measure to see what kind of price action is going to be.
And much more fundamental bets, correct?
That's correct.
Rather than a momentum bet, which a meme stock essentially is. So just buy this thing, even though could be a piece of shit. We're just going to buy it and drive it up.
That's right. And so what we can show you is where the news is going to have the maximum effect. If the company does well, the next dollar on the long side is going to make the shorts cover. This thing's going to go up 15, 20%. The next negative news, longs will sell and shorts will pile in, and then the stock will be on 20%. So these are very high vol situations.
So you've been following this for a long time. Is this, I mean, are we at an inflection point here between meme and battleground stocks? I mean, are we going to be now talking battleground stocks instead of meme stocks going forward?
Well, I think you put your point on something. Why isn't this a meme stock, right? One of it is that the rise of passive investing. So the meme stock was very much retail driven. And every time another index fund is bought, there's probably less money available for people to punt, right? Individually. So as 5 years ago, you look at how much more is in passive indexes rather than just some yo bets.
Right.
It's a lot. And so these stocks have institutions on both long and short. And we actually measure this and can show you that, in fact, the hedge fund cohort makes up a huge amount of the active longs, and obviously they're all on the short side. So that's the difference.